Warren Buffett has confirmed our worst fears that hyperinflation is already here and he's terrified. In Warren Buffett's latest Berkshire Hathaway meeting, he goes over that substantial inflation is already here and people, this is not a drill, this is what we have been discussing on the channel and it's time to prepare right now. In this video, I'm going to break down exactly what Warren Buffett has said on inflation. And Warren Buffett, he's a straight shooter. He's not one out there to put out all doom and gloom about inflation. When he sees the facts saying that there is inflation, you better believe it's coming. And not only I'll go over what Warren Buffett said about inflation, I'll go over how there's proof that there's going to be more huge price increases coming. And then I'll also go over how to hedge against inflation and how we can prepare, because the general population has no idea about the huge amount of pain that's going to come, about the price increases, about the debasement of their dollars and their hard-earned money, and they're going to get caught completely off guard. Okay, let's get into it. Okay, so as you can see here, Warren Buffett says we are seeing substantial inflation and prices are rising. Listen to this. Warren Buffett is joining the long list of executives saying serious levels of inflation are starting to take hold as the US economy roars back from the pandemic lockdowns. So everyone, it's not just me saying this now. It's out there in the mainstream media. The mainstream media is finally talking about it. But like I always say, once it's in the mainstream media, it's often too late. And that's why I always try to warn you ahead of time. Oh, it didn't happen this week. I guess it's not happening. But people, like I said, I will try to warn you 3, 6 months, maybe even a year in advance. So if it doesn't happen tomorrow, next week, it doesn't mean it's not going to come. And people be like, oh, I'll just wait till it comes and then I'll prepare. People, that will be too late. Listen to this. We are seeing substantial inflation, Buffett said. We are raising prices, people raising prices to us, and it's being accepted. So he's putting it out there right now that there's substantial inflation. And that's a big thing for Warren Buffett to say substantial, because normally he's a bit more conservative and he tries to just, tell people just keep on investing for long term. He doesn't try to alarm people, but even he is saying that he is going to lift prices. Other people lifting prices, and the prices are being accepted right now. So companies are going, oh, well, we can jack up our prices and the consumers are going to pay because they got all this free stimulus money from the government. And guess what the government's going to do with that? They'll increase their tax revenue, they'll devalue the debt, and that's why the government wants inflation to keep going, and that's why the Federal Reserve, Jerome Powell, wants inflation to keep going. Buffett called out much higher steel costs impacting Berkshire's housing and furniture business. And I'll get into in a minute about the skyrocketing commodity prices and especially steel. And he's now starting to feel it. And what you have to know is first the commodities will rise, then they'll start to pass it on to manufacturers, and the manufacturers will start to pass on to businesses, then businesses will start to pass on to customers. So there's a delayed effect from all the money printing and all the demand from the commodities, and there's a delayed effect from all the supply chain disruptions. So when people hear about all these problems with shortages, supply chain disruptions, inflation, money printing, they won't see it straight away. So like, oh, it's not going to happen. But people, it takes time for these things to play out. And he says here, people have money in their pockets and they pay high prices. It's almost a buying frenzy, Buffett said, noting that the economy is red hot. Well, if it's red hot, if inflation is skyrocketing out of control, what the heck is Jerome Powell doing up there in his Eiffel Tower? I'll tell you what he's doing. He keeps saying we want to make substantial progress towards our goals. But he doesn't say exactly what those goals are, even though he says it's 2% inflation and unemployment down. But really what his goals are is he wants to devalue the debt and he wants to increase revenue for the government so they can repay the debt. And he wants to create a big stock market bubble to boost his own bags. And then you'll be like, hey man, have we devalued the debt enough? Yeah, we devalued the debt enough. Okay, we've made substantial progress towards our goal. Now we'll start lifting interest rates after we've already devalued your dollar into the ground and devalued the debt and made the cost of living more and more burdensome. Then that's when they would have made substantial progress to their real goals. And it says here the Oracle of Omaha isn't alone in battling inflation at the moment, from everything to high steel prices or runaway copper prices. And listen to this. This is very interesting, and this really shows you what's about to happen. The number of mentions of inflation during the first quarter earnings call this month have tripled year over year, the biggest jump dating back to 2004, according to fresh research from Bank of America strategists. Raw materials, transportation, and labor were cited as the main drivers of inflation. Whirlpool CFO Jim Peters recently told Yahoo that the appliance maker just jacked up prices 5 to 12% to counteract rising steel prices. 5 to 12%. They keep saying, no, inflation is just 2-3%. Meanwhile, everything in the real world out there is going up much, much faster. Okay, everyone, now let's get into proof that hyperinflation is already here and there's going to be more major price increases coming. Have a look at these guys. Ethanol is up 62% year to date. Gasoline is up 47.85%. Crude oil 31%. Heating oil 29%. Brent 29%. We're seeing substantial price rises in the energy. But have a look at the other commodities. Look at the agriculture commodities. Lumber is up 70% year to date. Corn 54%. Canola 41%. Soybeans 21%, wheat 17%, sugar 14%, wool 14%, coffee 12%, cotton 12%, milk 11%, oats 9.9%, rice 9.3%, and palm oil 7%. This is crazy, everyone. This is pretty much hyperinflation right before your eyes. And they're trying to hide the inflation, and they're trying to hide the theft by the Fed changing the way they report M1 and M2 money supply, and the CPI really, I think, and what everyone thinks is CPI. But that's not all. Look at the livestock prices. Lean hogs are up 56%. So you're going to see big price hikes on meat coming soon. Not only that, but beef is up 12.4% and poultry is up 11%. And the price to make everything is also going to skyrocket, especially with all this infrastructure spending and EV movement. Look at this. Lithium up 93%. That's right, 93% in 1 year. Rhodium is up 73%. Cobalt is up 40%. Tin 39%. Soda ash 30%. Copper 27%. Steel 27%. Aluminium 22%, palladium 20%, iron ore 17%, coal 13%, and the list just goes on and on, people. The prices that make everything and the mandatory items we need, including housing, a lot of housing costs aren't included in the CPI, but just the cost to buy a house in some areas has gone up 50%. So housing is a mandatory need, it's a mandatory thing to survive, so that should be included in CPI. And with the whole inflation deflation debate, really there's no debate. Hyperinflation is here, it's right before your eyes, and this is the proof. Now there may be some discretionary items where people don't need that are going down in value, but everything we do need to survive is skyrocketing. So yes, technology, TVs, phones, etc., laptops may be getting cheaper, but you don't need that to survive. You need energy, housing, food to survive. So we're having deflation on some things, and we're having hyperinflation, and the cost of living is skyrocketing out of control. And here's more proof. So this New York Times article says diapers, cereal, yes, toilet paper are going to get more expensive. Retailers used to absorb much of the cost of goods when suppliers raised prices. Now the difference is being passed on to the shoppers. And listen to this. Procter & Gamble is raising prices on items like Pampers, Tampax in September. Kimberly-Clark said in March that it will raise prices on Scott toilet paper, Huggies, and pull-ups in June, a move that is necessary to help offset significant commodity cost inflation. Exactly what I've been harping on about. It's now happening, everyone. So what can we do to prepare against the coming inflation crisis? Because people have been completely blind to this. I've been trying to warn you, but now is the time to prepare. Okay, so what can we do? Well, everyone, like I've been harping on about, we are in a commodity super cycle. And the best way to hedge against inflation, this is not just financial advice, but just what I've been doing, is investing in commodities. And look at the index that I've been telling people, look, this may just be worth a look at. The S&P GSCI commodity index is up 22.9% year to date. So commodities have been absolutely smashing the S&P 500. So people can't overlook commodities anymore. And now you're starting to see more and more financial YouTubers starting to talk about it. And in the mainstream media, they're starting to talk about it. But this is what I've been saying for the past couple of months. You need to look into commodities as a hedge against inflation. Not only this, but obviously the precious metals should be a good hedge against inflation, but unfortunately the precious metals markets have been manipulated heavily, but there hasn't been as much manipulation at the moment in commodities, so commodities have been outperforming precious metals. And also, I know it's a bit controversial and you either love it or you hate it, but Bitcoin has been a good hedge against inflation over the past year. Over the past decade, it's been the best performing asset class, and I think over the next decade it may be the best performing asset class, but it is very risky, it's very volatile. Don't go put all your net worth into Bitcoin, but you do want a portion of your portfolio as a hedge against inflation and in Bitcoin. So everyone, what does this mean for the financial markets? What I think is going to happen next month, we're going to see the CPI increase unless they completely manipulate it, because don't put it past them to manipulate the CPI, which they already do. But even the official CPI numbers are going up. That means the Fed is going to have to start tapering its quantitative easing. They can't just watch inflation skyrocket like this. They can't just watch asset bubbles keep going up like this. They have to act now. And even the Dallas Fed chair has called out Jerome Powell. He's saying now is the time to start talking about tapering the quantitative easing, and now's the time to start talking about lifting interest rates, because the Federal Reserve thinks they can just click a button and inflation will go away. But it doesn't work like that. And once inflation gets out of control, it's very hard to stop. So if they do start lifting interest rates, we're going to start seeing some big pain in the stock market, in the housing market. So don't become complacent and just think the stocks are going to go up forever and the housing market will go up forever. I do think we're going to be in for a wild ride over the next 6 months. For all my loyal viewers and subscribers still watching, you're awesome. If you haven't already, please tap that like and subscribe button. I'll keep you up to date on the latest housing market, stock market, and global economic finance news. If you're bored, I'll put up some of my other videos here. I'll see you there.